Good morning, everyone. Welcome to our Friday morning trading room, day before a holiday long weekend, Labor Day long weekend. So the markets just opened up, and you can see we're pressing 6,000 here on the NASDAQ. Yesterday, another very strong rally day. Not quite as fast a rally as Wednesday's session, but Thursday still continued higher overall, topping out at 60.20 during the overnight. And here we are opening with a slight gap to the upside. Nothing to be too concerned about, I would think. Looks like if you're going to follow your first in-sync eagle signal, we're getting a nice buy opportunity here off of a red bar buy off of the hard edge. It's currently against the ATR, so we do have a chance at a second push opportunity on this one. The second push simply means that we allow the signal to engage, we see where the market flinches, and then we place our entry above there. Now with the first in-sync eagle signal, all we're looking for is that first signal where everything is in sync. Oh, I guess it formed right here. And as you can see, it tends to get some very good results. It's not perfect. I think the other day on Wednesday's session, if you had taken that first eagle signal, you would have struggled to find its profit objective. And the thing with the first eagle signal as well is it comes out obviously very rarely, usually within the first couple of minutes of trading. And a lot of times I'm really not that keen on taking signals quite that early. We'll see how this one plays out if they give me a chance to get to my profit target. You can do the same thing for you Raptor owners. You can do the same thing on your Raptor, where you can concentrate on that first in-sync signal. You can see here this morning we have a number one signal, again with the opportunity for a second push entry. Can I cover it down below there? No, that's a little bit out of reach. Cover it below the low of the morning, something like that. So you can do the same kind of idea on the Raptor. Now, while we're waiting for that, I had a very interesting email yesterday, and I'm not going to mention any names because I don't want to embarrass anyone. But I think this is a common issue, maybe more common than people realize, and they don't say anything. All right, I'm going to cancel this order here now on the Raptor, and you can see the Eagle trade still struggling here. We're actually now kind of producing a rule of three. Not quite yet. We don't have all three signals counter trend, but we have had a test of the extreme, haven't we? So this is a saleable signal. And I wonder if the market's going to try to get into that opening gap. Let's see, where did the market finish? Oh, my gap is right here at 98. I should probably pull back a little bit, maybe to 95. All right, well, we'll just let that one sort itself out a little bit. All right, so I got this email from one of the DTS Raptor members, and he's struggling. You know, he takes some winning trades, gets some losing trades. What bothers him is that he finds himself doing what he refers to as silly things. He says exactly the opposite of what he should be doing. And he's wondering whether or not you can actually make any money trading. And I think this is, like I said, a little bit of a more common problem than not. And so I just wanted to share my advice with him, or the advice I gave him with you. First off, trading is a very difficult business. It looks simple, but it is difficult. To that end, I think it's to your advantage to keep things as simple as possible. In fact, the best traders that I have met or interacted with have always had the ability to keep things simple and to control their trades. They didn't trade out of boredom. They didn't trade from a gut level. They had a very simple methodology. Sometimes it was something as simple as a bounce off of a trend line or a break of a trend line. Nothing really fancy. Other times they stuck with a moving average crossover that was confirmed by a MACD crossover. But they stuck with it all the time. They kept it simple. But a lot of people take trading too lightly. Trading is a job. If this is going to be the way you want to earn your living, you have to treat it like a job. You have to treat it with respect. And I'm not just talking about the study and the practice that is involved with trading, but also the discipline. If you're still learning and you're in sim mode, don't let your paper trading become a video game, which is a complaint I get a lot from people who really just want to start trading real money. They don't want to paper trade because they say they can't take it seriously. Well, you can if you get yourself in that mindset. If you had your job and you worked at your factory and you produced substandard work, it would not be long before you would be out of a job. Right? Your boss would sack you, find somebody else to do the job right. Or if you are the boss and you had people like that working for you, it would not be long before your business was probably on the rocks because nobody wants to buy your stuff because you're not doing a very good job. Trading is no different. You have to have a business plan. You have to follow that business plan. Now, a lot of people don't understand what it means to have a plan in trading, Because with the DTS system and the Raptor system, we get a lot of opportunities, especially if you have all four tools. There are no shortage of opportunities to take, and I think this was part of the problem afflicting this person, is that there were just maybe too many options, and he wasn't sure which ones would be working and which ones would not be working. So you need to devise a business plan. And the example I gave, because I know it has very good results, is let's say you're only going to trade first micro macro crosses on the Hawk in the NASDAQ, and you're going to be all in, all out. And let's say you're not going to take any trades for the first half hour of trading. That's your business plan. And let's say you're going to, once you make that plan, you have to stick to that plan without exceptions. No exceptions. Prove to yourself, first off, that that business plan will work. And it's easy to do. You can just roll back into your chart as many days as you need to and find your first micro macro crossover signals and see how they would have worked out. Okay, so here's a half hour after trading yesterday. Here's a first micro macro cross to buy. You took a little heat, but it would have filled here. You would have got your profit. Then you got another first micro macro cross to buy. Okay, that one worked out. You got a first micro macro cross to sell. Looks like that one may have got to the profit objective. So there's the entry. Yep. Okay, it would have at least hit your break even. But this is your business plan now, and this is what you're going to do. That means you're going to ignore macro pullback signals, 4-arrow consolidations, red bar buys, green bar sells. You're going to ignore your Falcon signals, your Eagle signals, your Raptor signals. Why? Because your objective is to make money, and if you're not making money right now, obviously you're doing something wrong. And I strongly suspect that one of the things you're doing wrong, or perhaps the biggest thing you're doing wrong, is you're overtrading. You're shooting from the hip, you're getting in late, you're trading from the gut. And you can't trade that way. The market will always attempt to fool you. I know we talk about the market like it's one person or a group of traders, but really the market does certain things all the time to try to fool traders. Like the really, really big traders will hold their orders, or they'll try to spoof the market, or they'll do something to make the market try to accelerate really quickly, get everybody to reach for their buy or sell buttons, only to reverse the market and go the other way. That's what the markets do. So once you're profitable working your plan, then you can look at adding something else. Maybe if you're still on the Hawk, you're going to maybe add a different market. Maybe you're going to look at doing that with, I don't know, crude oil. If what you add, however, is not working out, then you need to remove that. Let's say the first micro macro cross signal and your first half-hour abstinence of trading and your all-in, all-out strategy on crude oil is not working. Okay, well, what should you do about that? Well, if there's an obvious little glitch in your crude oil strategy, then repair it. If there isn't, then remove that part from your business plan. It's really as simple as that. My single best piece of advice to all of you, and I cannot overemphasize this, is to keep a handwritten journal. A handwritten journal will do more to improve your trading success than any other thing you can do. I don't review my journal, but the simple act of writing things down every single day impresses on your mind what is working and what is not working. You will, I guarantee that within a week or two at the most, you will start to see patterns develop. And I kind of went the extreme with this person, but I feel about this so strongly that I said, and I'll say the same to all of you, if you are not prepared to keep a handwritten journal of your trades, you may as well stop trading. Because you're never going to get a handle on what's working for you and what isn't. We're all different. Some things work better for some people than others. You're not like me, I'm not like you. Yes, we do, certain things, but what suits my trading personality may not suit yours, and vice versa. So please keep a trading journal. And like I said, if you're not prepared to keep a trading journal, you may as well stop trading, because it's going to be death by 1,000 paper cuts. You're never going to get a handle on what's working and what's not, and you're always going to be chasing your tail. Some days you'll have good days, other days you'll have bad days, and it will just be endless frustration. Good news is, the simple act of keeping a trading journal will solve that problem. And if you're in this trading room, I know for a fact that you can afford a pen and paper. You probably have some around the house. Another piece of advice that, for those of you starting out or those of you struggling to make money trading, avoid all counter trend trades. Now on the Hawk Scalper, that's probably a little bit more flexible because your target is so tight. But everything else, if you're looking here at the Raptor or the Eagle even, just avoid the counter trend signals. Here we had a number 2 signal, counter trend signal. Yes, it worked out. You're going to get those types of things that are going to entice you to take counter trend trades. Counter trend trades, by definition, are very, very difficult trades to profit from. We provide counter trend signals because if the conditions are right, it can make for a profitable move. Okay, what are the right conditions? Well, normally the band is very, very extended. We will see a very good test of the extreme and the failure. And there should be a major trend line break. So if you're, here was yesterday's session, so we have a trend line looking something like that. Okay, so we broke the trend line. We should see a test of the extreme. We already produced an early number 2 signal. Target is the hard edge. Here's a test of the extreme, and there's kind of our follow-up number 2 signal. And we got down to the hard edge. This wasn't a very worthwhile trade, though, was it? For the hassle of trying to go counter trend, there's not that much profit objective left. So when you're starting out, or if you're struggling, avoid the counter trend trades. 90% of my losing trades are almost always, well, 90% are. Almost all my losing trades are counter trend trades. There, that's the right way to say that. The odd losing trade that is not a losing trade is, just one of those things. The market's ranging. I thought it was trending. Is something else. But counter trend trades, you're always teeing yourself up for the possibility of a loss. So just avoid them. You can add them to your business plan when you become more proficient. But for the time being, just leave the counter trend trades alone. If you don't know what the market trend is, here's an easy way to find out. You can build yourself a chart for the market you are interested in. A longer term chart. So let's say we're going to look at something like a daily chart. So here's a daily chart for the NASDAQ now. Okay, so you just want to take a look at this and you want to say, okay, what's the trend here? And yes, you need to look at the left side of the chart, but try not to get too hung up on resistance levels. What's the trend? Anybody? What's the trend here in the NASDAQ? Nobody wants to play? We only have 3 choices, up, down, or sideways. Yeah, thanks, Ken. Ken says up. Well done. I would say it's up. Look at the last 3 days. Look at those rally bars. 1, 2, 3 really strong rally bars. Chances are pretty good that the market will continue higher today. Therefore, if I think the market is in a rally day, I should concentrate on buying opportunities. It's not to say we won't see a pullback. It's not to say we won't even take a loss. But it seems like the chances are better for the buyers than they are for the sellers. If a daily chart is too long for you, maybe look at an hourly chart. And just take a look here and say, which way is this market going? Well, here too, it appears to be heading higher. It helps if you look at these types of charts if you eliminate the overnight. So instead of the 24/7 or 24/5, if you go to the regular trading hours, if you go with anything less than a day, you can get a better feel. And as you can see, look, the market's heading lower. The overall trend is up. The market is heading down. Okay, that's going to happen. Now, here's something that I struggle with in the trading room, namely that my responsibilities here are twofold. Number one, my responsibilities are to try to point out good signals to you, to show you how the tools work. Number two, also to try to alert you to the best possibilities, the best opportunities. Those two requirements are a little bit at odds with each other. Because once again, we're going to get more opportunities then I would personally trade. And again, this goes back to my trading personality. My trading personality is very, very conservative. I can look at a chart for an hour or two without placing a trade. The only thing that bothers me about that is that if I have you in the trading room with me, you're all wondering, well, why is he not taking that trade? Well, why shouldn't I take that trade? Because you can see a lot of these trades work out, right? Let's say we went with our premise today that we're only going to be looking for buying opportunities, and we're focusing here on the Raptor, and let's say we're only going to take, well, we're only going to take number one signals to start. We're only going to take cloud crossover signals with the overall trend. I believe the trend to be up. We're not trading the first half hour of the day, okay, so that's almost expired. So now I'm going to sit here, maybe for the rest of the day, and wait for a number one signal to develop. Do you have the discipline to do that? If that is your business plan, or are you going to start to get a little bit bored, and are you going to say, oh, well, there's a number two signal. Maybe I'll try the number two signal. Yeah. So I'll change my business plan so that I'm only trading long signals. And after a little while, it won't be, I'll wait for number two signals. It'll be, I'll just buy any signal. I'll buy any buy signal. And so then you start taking signals like this and signals like this. You have to stay with your plan. You have to get profitable. Profitable trading requires discipline, a lot of discipline. You have to be okay getting shut out of a day. I made the point of saying you have to exercise patience, and I said you have to. I say exercise because patience is like a muscle, and most of us, our patience muscle has atrophied. Your kids used it all up. There's nothing left for trading. If you're looking for trading as a source of amusement, get yourself a better hobby. There are cheaper, less frustrating hobbies than trading. If your objective, however, is to make money, get serious about it. The market can only do one of two things. It can either trend or it can move sideways. There are no other options. It is either trending or non-trending. And this, it will change during the day, it will change during the month. But your objective is to decide, is the market trending or is it moving sideways? If it's trending, then trade accordingly. If it's trading sideways, you have to trade accordingly. And that, in a nutshell, so to speak, was my reply. But it is difficult, but it doesn't help matters if you just throw everything at it and hope something sticks. It reminds me of over the years, Adams hired marketers to help with promoting Indicator Warehouse. And one of these fellows was a rather big name internet marketer. And he was expressing his frustration with online marketing. And he said, we essentially take the spaghetti refrigerator approach. And Adam said, what's that? And he says, we throw the spaghetti against the refrigerator and we see what sticks. So they didn't really know what was working and what wasn't working. Different things worked for different products and different markets. I'm not going to say trading is quite like that, but a lot of people take that shotgun approach to trading. Let's just take every signal and see what works. I get this a lot from new owners where they'll start taking every single signal. And if there's a strong trend day, things will usually work out because there's enough with trend signals to offset the losing signals. But when you hit those sideways days, I get the emails, what's wrong with the Raptor? Why is it losing me money? Well, maybe, maybe, just maybe, it's not the tool. Yeah, Stephen makes a comment here. His question is fair. I know a few large companies like Goldman who make $5 billion per month trading, but I've actually met only a few profitable traders. I'll share a story with you, and I wish I remembered the lady's name. You know, she's one of these rags to riches story that we all love to hear. But she was a housekeeper, and she didn't like being a housekeeper, and she wanted to do something different. And she saw this promotion for, you know, learn how to trade the stock market kind of idea. Cost her, I think back in the day, $5,000, which would have been a really big chunk of change. Well, it still is. And she goes to these lessons, to these seminars. They taught her one trading pattern. That's what she got for her $5,000. One trading pattern. She didn't know any different. She was never involved in trading before. It's not like she had, you know, dabbled in stocks or penny stocks or Forex or anything else like that. And she turned her life around. She became a full-time trader just from trading the one pattern. Now, I know you're all dying to know what's that one pattern. You know what? It doesn't really matter. I think Linda Ratsky is the one who said you only need one setup to make a living trading. You only need one successful setup to make a living trading. Yeah, like Steve says, the cup and handle and the buy breakout, that is Dan Zanger's best pattern. Yeah, there are a lot of traders who only concentrate on one pattern. And it's almost like, as human beings, we can't focus on too many things at once. You know, we have to really limit what it is we're doing if we're going to do it right. Goodness knows I am not a multitasker. I can barely do one thing at a time correctly. But like I said, you need to develop your business plan. And it may not be as restrictive as what I pointed out. Maybe you're going to take, just going back to the hawk again as an example, maybe you're going to take first micro macro crosses, you're going to go all in, all out, and you're going to ignore opening range. And that's going to be it. You're not even going to worry about the daily bias because it's the hawk, and you're going to, you know, just look to scalp. And as you get more money, you're going to add to your positions, right? So let's see, opening range ends right around here. So here's the first micro-macro cross signal. I know you're looking at this and you're saying, well, Eric, wait, the micro-macro lines didn't cross. No, that's true, but everything went out of sync and came back into sync. That's what the first micro-macro cross shows us. So we have a market that is gone all out of sync, bars, trend lines, etc. You get your signal, the market drifts lower, and you get your profit. Hooray! You had a profitable trade. Beats losing money any day. Whereas my uncle always liked to say, beats a kick in the head with a frozen boot. And that is true too. Mr. Buckaloo is asking, would you look at the weekly range using a daily chart to get a feel for the day's outcome? Yes, anything like that is helpful. The only thing is when you're looking back at a longer term, like if you're day trading and you're looking at a weekly chart, there's a lot of room for the market to move before it makes any significant change on a weekly chart. But yes, having the overall market bias is very important. Like we all agreed that the market is in a bullish bias, and today it's just fallen straight down, right? And a lot of people would be saying, "Oh, you know, why did I not sell? Look at all the money I could have made on the way down. Why did I not take that rule of three signal? I know there's a trend change signal. Why did I not get on that?" If you're not making money, you really have to dial back and, like I say, stick to your business plan. There will be a buy signal somewhere here today, and if that's our plan, that we're going to buy the market because that's the overall trend, then we got to stick with it. If that's not your plan, you know, you got to formulate a plan that you are comfortable with. It's your money after all. And like I said, you know, I'm a very patient person. I can sit here all morning. I can sit here for an hour or two and not take a trade. I can wait for the market to give me the setup that I'm waiting for, and then I'll go in and take a position. It would make for a very boring trading room, let me tell you. I'm not sure anybody would want to attend. But I can guarantee you, or almost guarantee you, that at the end of the day, I would be printing a number in the black, not in the red. See, here's a great testimonial from Mark, because I know Mark is one of these people who has taken some of these things to heart and has incorporated them. And I don't, my grandfather always said I'd make a great preacher, but I don't want to sound like I'm talking down to anybody. And I certainly don't want to come off as a know-it-all, because I don't know it all. But what I do try to share what works. Mark wrote, I took that late filter entry in the Falcon, although it took a little patience. It paid off for the 300 with 3 contracts. So the late filter entry signal right here occurs when your filter goes out of sync, comes back into sync. Trend line never changes color. Very high probability signal on the Falcon. Probably held up here a little bit because we're down at the primary support zone. Mark says, paid off 300 with 3 contracts, all in, all out. That makes my Friday and week with just over $3,500 on the week. Well done, Mark. Excellent trading. but I know from Mark's other posts that he does not overtrade. So just going back to the whole bias scenario. So we have a bullish bias on the day, right? We think the market is going to be more bullish than bearish. So here we have a number 2 signal now. Let's see how that plays out, whether the buyers show up and get us to our profit objective. Oh, and by the way, you know, it's okay if your business plan is to have a runner in play. If you're the type of person who hates leaving money on the table, you know, let's say you took this number 3 signal, you took your profit, and it just grinds you the wrong way to see all that open profit get away, then make it part of your business plan that you're going to have a runner, or that you're only going to trade with a runner. Like I said, trading is a very, very personal business. I can tell you what works for me, but I can't tell you what's going to work for you. You have to figure that out. Okay, now, I know this is a counter trend trade, and I told you to avoid all counter trend trades, but again, you know, we're in the trading room here. I got to show you something, so let's see how this goes. Ooh, they slipped. All right, there's a note to self too. Anytime the market slips you, you should be wondering, why did I get a slip on my entry? They slipped me 3 ticks here. Did they slip me just to fill me so they can reverse, which is often the case? Or did they slip because the market's just a little on the thin side today? So I'll get my stop ready. Oh, by the way, your business plan should have a stop strategy as well. You should, in your plan, you should have outlined how you're going to manage your stops. Like, are you going to use an auto break even? Initial stop, where is it going to go? Are you going to maybe keep your stop 2 swings back? Are you going to use a 3-period ATR? Are you going to do whatever? You need to have a reason. All right, got the auto break even. Come on. That's unfortunate, that slip. I would have had my profit objective if I did not get that crummy entry. Poop. So close, within a tick of my profit target. That, however, was just an unfortunate entry. Peter sharing his experience, and Peter writes, just to add to your comments, I do not dare make more than 3 trades per day. Just made $300 on one trade, one and done. This week up $2,300. Well done, Peter. Peter says that's on 5 trades. I guess my broker is the only one losing money. And that's true. That's the upside as well to trading less, is your commissions and fees are a whole lot less. Peter says, all I can say is keep listening to the godfather of DTS. That's funny. I like that. Yeah, I'm getting some kudos here for you, Peter, from folks in the trading room, and Mark. Well done, fellas. And for those of you who are struggling, my concern is that you're just going to suffer in silence. You're welcome to email me. Out of all the people here in the trading room, there's really only about the same 6 or 7 people that ever post any comments. So I know the vast majority of you are just watching, waiting. If I can help you, I will do my best to help you out. All right, so they're just kind of stuck here sideways. Back into the hard edge, where of course we normally anticipate a reaction. There is a strong bearish flavor on the morning. A lot of that could be profit taking too, you know. Going into a holiday weekend, the market's been very bullish this week, so there could be some profit taking going into the weekend. A lot of traders maybe not that keen on loading up before a 3-day break. Peter says here, it would be nice to have a DTS online community. I haven't mentioned it in a long time, but there is a DTS and a Raptor Facebook group. Now, I don't have the particulars for that. I'm not much of a Facebooker myself. I know I should be, because that is where a lot of people go to discuss things that are working for them and things that aren't. Adam would have those details. You do have to give him some time to get back to you, though, because Adam, of course, lives in Houston, and they've just been pummeled by Hurricane Harvey. He had the foresight to get the family out of town and up to higher ground. But he's working remotely, so he doesn't have the online presence that he used to. And I'm not sure he knows what kind of condition his house is in. Poor fellow. But he says it's nothing that time and money won't fix, and I suppose that's a good attitude to have. What are you going to do about it? Not much, I'm afraid. So you can see what I mean about when you're trading, you're doing a lot of waiting. There can be days where things are very busy, and as I said, as you become more proficient and you find what's working for you and what isn't working for you, you will add more things to your trading arsenal. Like Mark, for instance, and Tony. I know Tony's a big fan of the late filter entry signal in the Falcon. And if that's a signal you're going to follow, do yourself a favor and just roll back your chart and see late filter entries and see for yourself how they work out. Most of them will work, not all will, but convince yourself that when you get that signal, because when that signal prints, it's not always going to look very enticing, but convince yourself that when you get that signal, you will take it. And when you find one that doesn't work, try to understand why it didn't work. So here's a late filter entry signal. High probability signal, didn't go anywhere. Definitely stopped you out. Didn't matter where your stops were, you got stopped on that one. So why did this late filter entry not work out? Well, without digging too much deeper, I would say it seems like the overall trend today is up. Therefore, there's your counter trend trade. Here now we're working a trend change signal on the Falcon. We've got a first micro macro cross higher here in the Hawk. Things really, really getting sticky and stagnant. Yeah, a couple of comments here from folks thinking about Adam, saying, they're thinking about him and prayers and thoughts for him. And I'm sure Adam really appreciates your concern. Mark sharing his favorite tools out of the toolbox. He says, Mark says, I know a lot of traders here use the Raptor, but if I can offer any advice with the 3 DTS tools, I only take Hawk, first micro macro cross trades, Falcon trend change, and late filter entry signals. Patience and waiting for those is like a sniper, and that works for me. So there you go, folks. There's some sound advice. It's not just me. It's not just me preaching to you. All right, so now here on my Raptor trade, with the slip and the break-even stop out, I might be making notes in my trading journal about the slip on the entry, and maybe I should have left my break-even trigger higher or eliminated it altogether, because I would have finally realized my profit objective. But in my book, break-even is not a loss. All right, couple comments here. Steve says for the Hawk, the first micro macro cross is a moneymaker, except for me lately. He says it's you got to give the market a few minutes out of the open, I think, Steve, before you start hopping on some signals. Jeff says the same strategy has worked for Me also. Patience, no more than 3 trades per day, period. Gary asks, how can I stay on the right side of the move using RTO? Now, I think what you meant is RTS. I think, Gary, first you need to identify the market trend. That's really your first job as a trader, is to figure out which way is the market going. There's always going to be 2 sides to every trade. I know this sounds stupid, but what I'm trying to say is there are always bullish forces at work, and there are always bearish forces at work. You are always going to be making a trading decision. I heard one trader describe it as a gray fog, and I think that's probably a good way to look at it. Very, very rarely will the fog clear enough that you're going to have a really clear picture of the trade. You're always trading from some form of indecision. You're never going to have all the pieces to the puzzle. So a very simple way to try to stay on the right side of the market is obviously to limit how many trades you take. And as I said, you need to try to figure out which way the market is trending. You may not have been in the room when I showed this earlier, but a real simple way to figure out which way the market is trending is just to take a look at a longer term chart. Here's a daily chart for the NASDAQ. Which way does it look like the market is trending to you? These last 3 days, forget that this bar is red. If that red throws you, then look at bar charts or even at a line chart. But it looks like the market is up. Yeah, Gary says the market's up. I would agree. I would think the market trend is up. Does that mean we won't see any pullback through here? We can't see the market retrace back to 5,900 before the next move higher? No, of course not. In fact, it probably seems quite likely that's what the market will do. However, if we have a bullish bias, and providing, we're not trying to hit home runs on every trade, we should still be profitable on our buying days, even though the market may be going down. For instance, back here, huge sell-off in the NASDAQ. You may look at this and you may say, I think the market's got a selling bias. I'm going to be a seller. What would have happened the next day? Well, the market opened, sold off all the way down to here. Let me make this bigger. Sold all the way down to here, and then rallied back up. Could you have made money selling on this day? Absolutely. Absolutely you could have. What about the next day? Could you have made money selling this day? The market opens up here, sells off to the lows, rallies back. What about this day? Market opens here, sells off the whole day, recovers a little bit by the close. You could have made money on all these days selling. You could have made money on this day. Out of the open, sells off, definitely made money this day. This is probably the only day you would have had a hard time, or pardon me, this day would have been a little tricky. This is probably the only day you would not have made money selling, because the market opened down here, didn't spend any time going lower, and rallied the whole day. You may have been shut out most of this day, or you may have incurred a couple of losing trades as you attempted to short. This day, yeah, for sure. Opens here, sell off, not a very active day. This day, again, could have been a little tricky. There's only a little bit of a tail here, may have had one opportunity. This day, definitely. This day, for sure. This day, yeah, not a big day, but still a profitable day. This day, absolutely. This day, for sure, for sure, for sure. And now all of a sudden things start to turn around. Now you start getting days where you're not getting any selling opportunities, or they're coming late in the day. Here's another one, not many selling opportunities, not many selling opportunities. By this day, you might be looking at this and you might say, Gary, I wonder if the market's still going down. Maybe I'm going to start looking at buying. So now your bias shifts and you become more interested in buying. But on each of these days, there are buying and selling opportunities. So I think the first thing you need to do is try to identify the trend. And if you think the trend is up, which I would agree with, then you should try to favor buying opportunities versus selling opportunities. Now, I shouldn't have closed that chart yet, because if you look at, say you're going to take your bias maybe from an hourly chart, and that's okay too. So you're going to look at an hourly chart, you're going to say, yeah, okay, it looks bullish, it looks bearish, and you're going to take your cue from there. You can do the same thing if you have the whole DTS package. You can look at the eagle, and you can say, oh, well, okay, the eagle band is stacked in a bearish fashion. I'm only going to look at selling, because to me, today, the market is bearish. Now, I know that sounds conflicting, but the fact of the matter is you need to make a decision. And we're not always going to see things the same way. There have been times in the trading room where I'm bullish, somebody else is bearish. I don't know why it works out this way, but they're usually the ones that are right, and I find myself on the wrong side of the trade. Well, no, not always. Sometimes I'm on the right side of the trade. But that's trading, right? There's differences of opinions. If everybody thought the same, there would be no one to take the other side of your position. So I would say, for starters, settle on your bias. Settle on which way you think the market is going. And it's okay to change your mind. These things are not carved in stone. You need to be flexible about it. But let's say, like today, we consider the market to be bullish. We're going to concentrate on buying opportunities. Therefore, we would have watched the market produce this number 1, this number 3 signal. We would have watched prices fall off dramatically, and we would have not been too upset about it. We would have got a cup of coffee, maybe kick back, check the newspaper, glance at our screen every once in a while, and lo and behold, we get a buy signal. Okay, well, I'm bullish on the market, so I'm going to try to buy that signal. And not just any signal, but a high probability signal. So that's how I would suggest you stay on the right side of the market more often than not. And then limit your trades. Limit the number of times you get in. 3 trades is a favorite of mine, because with 3 trades, it gives you the opportunity to be picky. If I know I'm only going to trade 3 times today, I can be very choosy about my signals. I don't have to, if I get let's say I decide the market is short, I don't have to take a signal like this that may not be one of my high probability signals. It may not even look very good. There's very little structure. In fact, it looks like it's trading near the bottom end of a trading range. Right? So I don't have to chase every single signal. You probably heard me say this before, but when you're trading, you're not on a production line. You don't make more money by trading more, and yet that's the mentality. And to be fair, that's how things work in the non-trading world. In trading, you make money by being right, not by doing more. And there is a difference. You need to be right, And as your account allows, you need to capitalize correctly, which means that if you're taking this trade down here and you can set it up so that you can afford 2 contracts, then you take 2 contracts. You don't take 1 when you can afford to take 2 or 3 or 4. Because by taking that extra contract, you're going to increase your earnings. People who take exception to the way I frame my trades are always coming to me and saying, oh, well, I would set up the trade like this and I would only have, here, let's do it like this. I'll have $50 at risk and I've got a 2-to-1 risk-reward ratio. If you lose on your trade, you've lost $270 or whatever it was. I'm only losing 50. Yes, this is true. However, in my trade, I made $200. You're only making $100. I'm earning twice as much as you are. Right? So if we take 3 trades a day each, you've made $300. I've made $600. That's how you go from being a hobby trader to trading for a living. And it's not just me. You get independent people here in the trading room sharing their experience, and they'll tell you that's what works. Like Peter said, it's the broker who's suffering, because now instead of trading 10 times a day, he's trading 2 or 3 or maybe even 1. So instead of owing the broker $50 in commissions plus fees, he owes him 5. But his account is growing, and that's what matters. Most of the money on Wall Street is made from commissions anyhow. Enticing people to trade. Gary says, I'd like to trade for a living, and I think that's pretty much the status quo for this trading room. I think everybody here has that objective, but this is how you're going to do it. You know, start small. Start with, like I said, that business plan approach. If you're trading with the Raptor, then like here we're going to get an early #1 signal. If you have to sit and wait for 2 or 3 hours before you get a signal that meets your parameters, then that's what you're going to have to do. So just settle on your market, settle on your stop strategy that you're going to use, settle on your profit objective. Are you going to be all in, all out, or are you going to have a runner, or are you going to do half and half, try to take profit on one, try to run out another? Are you only going to trade in the same direction as the long-term bias? Are you going to trade the daily bias? These are all things that you need to address and answer. Just remember this one thing: if you take nothing else away with you, there's 2 things I would really like for you to do. #1, keep a trading journal. And I know I'm starting to sound like a broken record, but honestly, if you're serious about trading for a living, keep a trading journal. if you're not going to keep a trading journal, it's just like I said, don't even bother trading anymore. It is that important. You don't have to let anybody read your journal. You can even discard the piece of paper at the end of the day. I keep a spiral notebook that I keep my notes in, and when it's full, I toss it in the recycle bin, and I go buy another. Yeah, Stephen says, Steve Forbes, who published Forbes magazine, says there's more money in advertising about trading than in trading. Well, the money would certainly be more consistent, that's for sure. Oh, I said there were two things I wanted you to do. That just occurred to me. First thing, keep a trading journal. Second thing, if you take nothing else away with you, don't overtrade. I also do one-on-one coaching, and I'll save you guys $100 right now, because almost everybody, without exception, who hires me for coaching overtrades. Here is a nice little red bar buy. If we were staying with our overall daily bullish bias, here's a little red bar buy you could take advantage of. We do have an opportunity on a second push entry. What I would be looking for here is a retest of the high, right? I want to see a test of the extreme before the market tries to resume the downtrend. Haven't really had one of those yet. Oh, look at that. They slipped me again. 2 ticks. Oh, that's not nice. Okay, well, I'm going to stop trading after this. I suspect the market is a little on the thin side. And of course, holiday weekend and all. Market could just end up drifting for the rest of the day. That's entirely possible. Like I said, the market conditions will change even throughout the day. So you should always be asking yourself, is the market in trend or non-trend? If it's trending, which way do I think it's going? If it's non-trending, well then I should either stand aside or I should try to buy low and sell high off the top end of the bottom end of the trading ranges. So we're just too thin here this morning. We got slipped on both entries. And as I said, that's not right. All right, gang, we're going to button up shop here. Oh, Mark has one more comment, and then we're going to button up shop a little early. Excellent comment. This would be a great closing comment as well. Mark says, it takes screen time and discipline and treating sim practice like you would do real trading. And that is so true. I've said this before, but don't let your sim trading turn into a video game. Mark says it's probably the hardest thing to do because it's not your money or not real money. And like you said, Eric, keep a trading journal and learn from your mistakes before putting real money on the line. Learn what does and doesn't work in sim and from your notes. It took me a while to get that down myself, but like Mark says, we all start at the same place. And that's true. I don't think I've ever met a naturally gifted trader. I do believe traders are made, not born. And it is something that you can learn, but like any skill, whether it's learning to play a musical instrument or become good at your craft, this is now your craft. You have to devote some time to it, some study. And it's not that the learning is hard, but the discipline and the patience, that's what most people struggle with. So on that note, we'll close up the trading room here for the week. I hope you have a very enjoyable holiday weekend, and I will see you on Tuesday. We'll talk to you then. Bye for now.